Is the way forward for oil companies, whether services or E&Ps, going to be merging, or is it going to be bankruptcy?
Well, I mean, I think in the upstream we'll see more consolidation. I mean, you got a number of smaller independents that do, in all probability, will consolidate. I mean, scale will matter in a declining oil price environment. Production and drilling in the shale, that sort of stuff. So I do think we'll see some consolidation, but primarily in the upstream.
Mark, one of the things we were just talking about is the uncertainty going into 2020. No one really wants to make a call. If you're going after a big merger right now, how do you factor that in, that you might have this very long closing period, and during that time you could see all kinds of political or macroeconomic shocks, and then things like activism, interlopers as well? Yeah.
I mean, look, I have maintained for a while that I think we should be cautious and in more of what I call a risk-off market. But the fact of the matter is, at the beginning of the year, I was talking about a 10 to 20% decline in volumes. It's now going to look like more like flat to maybe down 10. So I've clearly missed it. Transactions are still occurring. The market is still being driven by large deals. And it is kind of interesting. I mean, I listened before about, just what kind of recession we may see. And if we get one, is it mild? Is it going to be deeper? There's a lot of uncertainty. It's with China, Brexit. We've had the Hong Kong situation. But transactions are still occurring, and it's fascinating to me. I'm a little surprised, quite candidly.
Well, here's what I don't get. And Ed told me that you had advised on the Parsley jagad merger, which basically Parsley bought this company. All the analysts I've talked to loved the deal, and investors hated the deal. They really punished Parsley's stock. Like, what? Why? Like, what do you make of that? Well, even with Oxy and like Anadarko, investors cannot get on board with that kind of thing.
No, look, I mean, I think the sector is out of favor with investors. I think so. Any material type transaction, generally you're going to see some pressure. The stock did come back somewhat, so I think that. But look, it's a tough time in the patch, in the oil patch, no question. And so, investors are very skeptical about the sector. So it's not that surprising to me that any type transaction, even if rationally we say we need consolidation, on the day, investors have been pretty tough on the sector.
Look, Mark, this is an interesting one because it is a tough time in the sector. It's been a tough time in the energy sector for a while. Does that dictate more transactions or fewer?
Look, I think again, as I said, in the upstream, I think we're going to see more. It's harder to call, some of the other sectors, but I think as a general matter, in this environment, I think we will see. We'll see more, not less. I think you're going to spend a lot of time looking at the magnitude of the premium paid to try to gauge investor reaction and to try to get the best reaction you can on the day. But more importantly, if you do get some pressure on the day, can you recover afterwards? And if you have the right story, you got enough cost reduction? Is it a very rational fit in terms of the properties in question? All that sort of stuff really matters. All
right, take us more generally into the boardrooms. You obviously advise a lot of the biggest companies in the world on M&A and on what they're looking at. What's the pipeline like, and what's the sentiment like around doing big deals?
Look, it's still quite good. As I said, I'm pleasantly surprised, I guess, that it's remained as good as it has, given what you could argue are pretty significant potential macroeconomic headwinds and some of the geopolitical stuff we see. The question really is, and so look, I think most of us feel the business will be pretty good, and our businesses will look probably pretty good because of the backlog, through the end of the year and possibly into the first quarter. The real question is what happens thereafter, and a lot of it. I think a lot of it is still on the come. I think there is a lot of uncertainty. We've sort of defied. In some respects, we've sort of defied reason or logic in some ways, you can argue. But we'll see. I think it's going to be interesting.
Lori Calvasina of RBC Capital Markets, still with us. I wanted to bring you in the conversation because you had a positive view on energy stocks, really saying like that we've bottomed out, so much bad news is baked in, then you had to renege from that. What would make you feel better?
So, we pulled it back to a market weight, and I think, we noticed, I think the reality is we couldn't answer that question. And we sort of look at energy now as more of a trading sector, and we know that it's unbelievably cheap. But one of the things we do hear a lot about are climate concerns and long-term growth expectations. So I hear, a lot of chatter when I talk to clients about is energy being derated because of ESG concerns longer term. When I talk to growth investors, it's not really in their benchmark. They feel like they don't have to own the sector. So then you sort of look at who are the buyers of this sector. It tends to be the hedge fund community. They're pretty balanced. They're pretty neutral versus the S&P. And value investors have already loaded up. Now, I'll tell you what, the value investors, when things are kind of going well in the energy sector and the tape's acting good and we haven't had one of these M&A deals, I'm hearing, well, Look at all the dividends they're doing. It's actually one of the highest dividend yielding sectors in the S&P. Look at all the buybacks they're doing. And then we get these M&A stories, and all that shareholder friendliness kind of gets swept to the side, and the value guys say, well, I already have enough of this, and it's not enough to bring the growth guys back in. So we just structurally didn't understand what was going to really power a move outside of a trading range.
And you've seen this interesting thing of activists really jumping into the sector. I mean, obviously, you saw Carl Icahn get involved in a deal which was slightly different, but if I look at something like Marathon, which is a fairly classic energy company, and what's going on there, where they're saying, you know, you have these sort of defenses against the down cycle, get rid of them. They want them to spin off the gas stations, they want them to spin off the pipelines into the MLP. And it's quite interesting to see that, because they're basically saying, look, we would prefer that we had pure play energy companies to invest in, so we can play, as you say, that sort of trading game.
It honestly reminds me of like 3 years ago when Exxon continued to get pressure to like sell out their businesses, become more like Conoco, just sort of be very, very focused on one thing. And I remember Rex Tillerson being like, no, 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 no. And then they did the right thing because they wound up protecting them when all of a sudden oil was at like 26. What do you think?
Look, it's from my vantage point. I mean, the sector. I mean, I agree with the point about climate concerns and ESG. We're actually seeing ESG now become part of the conversation around deals, and there's a lot of interest. It's obviously further ahead, I'd argue, in Europe than it is in the U.S. But unequivocally, that does matter. I mean, in terms of whether we should have more pure play players versus large diversified majors, I mean, I'm not smart enough to make that call. But to your point, I mean, Exxon did sort of weather the storm. Look, I think in energy generally, it's not going away for the foreseeable future. Clearly, the emphasis on renewables makes a lot of sense, and we want to get there. But I think so. In the interim, then how do you, if you're running a major oil company, how do you manage it, and what are you managing to? And I think those are the kinds of issues we see. I still think consolidation makes sense in an environment like that, where you'll have shrinking demand over time, and you've got you've got ESG concerns. So you really got to figure out, if you're a CEO, how do you run your business for the future as opposed to looking in the rearview mirror.